Good evening. It's Vijay here. Welcome to Reflections on Sunday, on a Sunday that is 21st December 2025. Today is a topic which interests me a lot and where we as a family have invested hugely, about 40% in gold and silver across all our portfolios. And I've been one of those gold and silver bulls from the last 1 year. And this 2025 has done wonders for our portfolio because we could identify something which changed in 22 end and 23 onwards. We were tentative. 24, we increased our positions, which did well for us last year. And this year, further, we increased our positions. And now we sit on a 2020 percentage weightage in precious metals, gold and silver. Of course, we also have other metals. Now, the question which is plaguing people is that 2025 was a fluke year. That is, 2025, both gold and silver did well. Silver went up more than 120%, gold went up about 60-70%. Most people missed it. And now there is FOMO. People feel now that we have already missed out. And should we be really entering into gold and silver? And whether it is a bubble, especially on silver, whether it's a bubble and whether it will crash. So there are a lot of very strong opinions. Strangely, the people who call themselves precious metals bulls, at least in India, don't even have 10% of their portfolios in either of them. So at best, they have some 6 to 7% portfolio, 6% weightage of their portfolio in precious metals. So much for the precious metals bulls. The reason why people are scared is because they don't understand gold and silver. More than not understanding gold and silver, I think they do not know how to relate it to their day-to-day life vis-a-vis what's happening globally. So I just would like to just talk about where is gold and silver, and I will talk a little more on silver than gold, and I will also mention as to how where this entire thing could go in 2026, because that is important, right? Because that's what we want to look at. Should we be buying? Should we be holding, or should we be selling? So this is the famous quote of JP Morgan, the original JP Morgan, who said, "Gold is money, everything else is credit." Now this he said in 1912. The reason he said at that point of time was that we had a bank crash, a stock market crash in 1907, which he actually saw to it that things came into been stabilized. The real major crash happened in 1929, which we all know, but there were two other crashes before 1929. One was the 1907, the other one was somewhere around 1860s in US. So anyway, so gold was considered precious metal. Not only precious metal, it is also medium of exchange. So therefore, he felt and he believed that gold is something which we should be holding. Now, the current head of JP Morgan, that is Jamie Dimon, other day he said, the way the debasement of currencies are going on, now the debasement of currency started from 1971 when Richard Nixon took gold off the standard. And then, people started printing any amount because there was no underlying asset to take care of it. So the central bankers all over the world had the freedom now to print any amount of money, and now it is only increasing. We recently have the QE, which started by the Fed last week, $40 billion. So all of that means the debasement of currency, especially the dollar and the euro and now Japanese yen, is going on. Now, what is going to be the stable currency, or let's say stable mode of exchange in the future? People think it will be gold. So that is why Jamie Dimon says gold could easily go to 5,000 or 10,000 in environments like this. Today we are at 4,000. People are wondering whether it is expensive. Okay. Now you look at what gold does actually. Gold, you see, if you study gold for the last 40 years, from 1970, after 71, after gold was, that standard was removed after Nixon. So in 10 years, it went up 25 times. So we feel now 10 years has gone up 4 times. We feel gold has gone up too much. But in 70s, it went up 25 times in 10 years. Why is 20, you forget about 70s? Just look at what happened in this century itself. In 11 years, it went up 7 times. Now, in 10 years, four times. What we are seeing today is far less than what we saw in the beginning of the century, between 2002 and 2011, around 2001 to 2011, 12. So, about 11 years then, or 10 years, you could say. In 10 years, it went up seven times. And prior to that, in 10 years, it went up 25 times, and we have gone up only four times. So, to think that, when currency debasement is now, at full speed across the globe, and sovereigns are now stacking gold, which they were not doing even in 2000 to 2011, and definitely they were not doing in 1971 to 1980, because that dollar had gone off gold standard just then. Now, and with so much of inflation, embedded inflation, and the problem with the BRICS vis-a-vis US, four times in 10 years, I think, is very less. You can, because there is precedence to that. So 2026 should be good year for gold. Now on silver, everybody is attacking silver more than gold, because gold is purchased by sovereigns generally, whereas silver is purchased by central by bankers, and some sovereigns have started investing in silver. Actually, sovereigns are investing in silver, but it is not coming to the fore like what is happening in the gold. In gold, for instance, Russia is active, China is active, India is very active. And one of the most active countries in holding silver is India. And then you have got Saudi Arabia. Slow and steadily, other countries also getting in. You have got Poland now coming into it, into silver. You've got Singapore coming into silver. And silver now is slowly getting into becoming a monetary metal. You must know that silver was a monetary metal even in China in the 1930s. It is not that only gold was the monetary metal. It was silver also was the monetary metal. So now in silver right now the discussion is it is highly overbought, because 8 months silver has gone up. 8 months this year silver has gone up. So if you look at the RSI chart, it looks highly overbought. So most people are expecting a big crash in silver, because in the last 45 years, silver went up to $50 three times. That is once in 1980, second time in 2011, and third time recently. So every time it has crashed. Now that silver has crossed 50, actually recently also around Deepavali time, it had gone to 54, then it crashed to around $44. These are all dollars I'm talking about. And now that it has crossed 54, people still believe that there will be a big crash, because 8 months it has gone up. I mentioned to you about gold, how it has happened. Now you see silver, what it has done in the past. It had a 20-year sideways market. You see, from there it went up. In 9 years, it went up 12 and a half times. In 9 years, it went up 12 and a half times, and then it fell down till 2015, 2020 actually. In 2020, it bottomed out. In the last 6 years, that is, if you take 25 also is completed, in 6 years, it has gone up only six times. Prior to that, in 9 years, it went up 12 and a half times. And prior to that, it has gone up much more. I just have some problem with the graph. But nevertheless, I'm saying it had gone up significantly higher at that point of time. So we have seen silver doing this thing about going significantly higher in the market. When you have a 20-year sideways market, it suddenly shoots up. At one point of time, as I said, in November 2000, so November 1970, silver was about 2, then it went up to 50. That means it went up 25 times. That is, in 10 years, it went up 25 times. Then in 9 years, it went up 12 and a half times. In 6 years, it has gone up only 6 times. So if you really look at it vis-a-vis the past, silver is not really, gone up so significantly that we have to worry whether it is in a bubble. Now, we are talking gold and silver. Is there any precedence in, say, Nifty, for instance? That is a very nice way of looking at it. So now in Nifty, for instance, if you look at Nifty, if you look at Nifty, what happened to this now? If you look at Nifty, you look at Nifty here. Between 1992 and 2002, this is actually, Nifty came into being only in 1996, but they have the trading view chart talks about 1992, Harshad Mehta peak, and they've equated. There was no Nifty at that point of time, but equal what it was. So for 11 years, it went sideways. You see, after that, it went up 8 months in a row. Nifty went up 8 months in a row in 2003. So everybody thought it is highly overbought, but it fell down only for 4 months because of the because of the Lok Sabha election. And then again, it went up 9 months. People thought, oh my God, 9 months it is gone. It is highly overvalued. It fell down for 4 months. It went up again for 5 months in a row. Then it fell for 2 months, it went up 6 months in a row. Then it fell for a few months, it went up 8 months in a row. Then it fell for a few months, it went up 10 months in a row. So it went up in 5 years, between 2003 and 2008, it went up 8 times. And we are talking of silver, for instance, 6 years, 6 times. So in less amount of time, Nifty went up 8 times. But nobody called that a bubble, really speaking, because they all call the great bull market. The bubble happened only in the last year because of the US housing crisis. But before that, Nifty has been going on. From 800, it went up all the way to 6,300. So in 5 years, it went up 8 times. So in fact, Nifty was in a bigger bubble than silver. It broke. The bubble broke not because of India as much as what happened in the US, and we fell down. But I am saying when you have 11-year sideways market going 5 years, you're going 8 times. Here, got a 20-year side. You got again 11-year sideways market. So going up 6 years in 6 years 6 times is not something I would consider as a bubble. Now, that is the question which people ask, whether silver is a bubble or is silver the next big thing. See, when there is a change, in fact, in 2003, there was a change as far as the BRICS markets were concerned. Everybody started pouring money in the BRICS market. That is why, even though the market was 11 years sideways and money came in, even though US market was not really in a bull market, Nasdaq was in a bear market, S&P was in a sideways trend, only Dow Jones was doing well between 2003 and 2007. We took off. We took off in 5 years, 8 times. So when structure changes, but if you had gone back and talked to the old people, that they said 11 years the market has not gone anywhere, how can it go up? So the first time it went up 8 months, people started shorting. They made some money because in the elections, the market crashed. But then again it went up 9 months. Again it came down 5 months. Just look at it. When something structurally changes, then the price may look huge at that point of time. It's difficult to digest, especially if you're not participated. Most people are not participated. They feel, my God, this is a bubble, it will collapse. But you look at it, I've shown you example of gold, I've shown you example of silver itself in the past, and this is Nifty. So whether silver is a bubble or silver is the next big thing, I feel silver is the next big thing. And why so? There are 5 reasons I can give. There are many reasons I can give, but I'll just quickly give 5 reasons because this will become too long. Recently, just about 10 days ago, on December 11th, the pension funds have been allowed to invest in gold and silver ETFs. Now, pension funds were not allowed to invest in equity itself in the first place. Last few years, it has now gone up to 15% they invest. You can invest. The PPFRDA has given the go ahead. So the first key reform has been that in SEBI-regulated exchange-traded funds, where the fund managers can invest. They can invest up to 1% of the AUM scheme, whatever scheme's AUM, 1%. The ETF type allowed is gold ETFs and silver ETFs. Then for non-government, private sector oriented, then gold and silver ETFs can now be part of the investment mix under the alternative asset bucket. The combined ceiling should be around maximum 5% across rates, equity-oriented AIFs and gold and silver ETFs. So at least 1 to 2% will go here. This is for non-government private sector PFs. And then for the, for government sector NPS, UPS and all that, and APY, you have the, you can put up to 1%. So what it will do is it will suck up the supply. So 1% is good enough because silver is a very small market. Gold is a bigger market, but still if it goes 1% goes away in our PPF, which is happening first time, then, at least you'll have a floor for silver. Silver is volatile. It may come down, but it won't stay down because of the number one reason, which I told you about the PPF. The second one, which is very important, is RBI is allowing loans against silver from April 2026. So we have time, but somebody seems to be accumulating silver because RBI says, like gold loans, the banks can give silver loans. So borrowers can pledge up to 10 kg of silver, jewelry, or 500 grams of coins. Only hallmark silver will qualify. All pledged items will be stored and all that kind of thing. The regulations are there. What is there for gold is there for silver. People have not understood this. What RBI is doing is monetizing silver, which means we are the first country which is monetizing silver, which means for silver, we will give you money. We'll give you a loan. Now, all other countries are also looking at it. Many countries may follow us. If they start doing it, if other countries start doing it, then again, supply of silver will get absorbed. and then the price has to only go up. We are not talking about what is going to happen in batteries or EVs or solar. That is separate. That is a huge market by itself. Let us say people challenge that. They say AI will collapse, solar will collapse, or EV will collapse. It will not happen. But I'm just saying the pessimists will say that. Pessimists are saying that. That's all bogus. Battery, nobody's going to use silver of that magnitude. You forget that. I'm only talking of what the government is doing. RBI is allowing silver, remonetizing of silver. And believe me, when it happens from on April 1st, 2026, then I feel silver will go up significantly. So these are eligible items, silver bars, bullion, not allowed. That is not allowed. Bullion and ETFs are not allowed. What is allowed is only actual physical silver jewelry kind of thing. And then the loan, what shall I? Sorry, I'm really getting into some trouble here. It's very cold, and that's why you see me fully covered. And the maximum LTV for loan. You can just have a look at it as to what are the eligible items, what is not allowed, what is the maximum silver limit, is it 10 kg, what is maximum loan to value, which is 85% up to 2.5 lakhs, and 80% to 2.5 to 5, and 75% above 5 lakhs to 10 lakhs. You can take a loan of 10 lakhs. And when is the implementation date? Is April 1, 2026. Okay. Then you look at what's happening in the US. US, the president has signed an order. Trump has signed an order on August 7, 2025. He's given the deadline 180 days, which comes to 3rd February 2026. He's talking of democratizing access to alternative investments. Till now, the 401k, this is very similar to the pension funds here. 401k is huge in the US. And they are now talking of putting other investments, that is real estate, there are other digital assets, and fourth category is direct and indirect investment in commodities. So commodities will mean silver also. So how much goes actually into silver, we don't know. But what I'm saying is this is the first time India is doing, and US also is doing, as far as the pension funds are concerned. And US 401k is huge, much, much larger than what India can think of. So you will see commodities going into the 401k, and silver will find a prominent place there. There are other things. There are direct investment and direct project financing, investment strategies. So all that kind of thing. He has given the labor secretary the 180 days order. Okay, so which means February. So we are already having PPF going to invest immediately in silver and gold. We will have US starting from February 3rd. We will have RBI starting from April 1st. So there is lot of silver and gold going to go into the government, government's coffers. As now look at US has also put silver and copper to the critical minerals list. They have done it just last month in November. So now that will see that tariffs also can be increased. So silver price will increase, and silver is a short commodity. The last time the peak mining was somewhere in 2016. For the last 6 years, there is shortage of silver in terms of there is more demand for silver than supply. Previously, silver was well supplied. That is why you had a 11-year sideways market. Now, slowly and steadily, the mine output is coming down, and silver mines. There are no silver mines really in a big manner. Only about 25% of silver is mined through pure silver mines. Otherwise, 75% either comes through copper or zinc or lead. So when they're mining for copper, they'll get some silver as a byproduct. 75% it comes there. It comes through that. People are now talking of people will now the old silver, they will melt it and put it in the market. Yeah, that is there, but you see there is so much of demand that will also get absorbed. You must understand there obviously people will do many things, or people will not go for silver, people will buy less silver. All those questions are there. But the silver price has already gone up, even though governments have not done anything, to take away silver from the market. As I said, Trump's executive order, RBI's executive revised order, and PPF has come only last week. So the demand is huge. Now you take the other one. Now from January 1st, China is putting further restrictions on silver. As it is, you are not allowed to export silver so easily from China. Now they're putting much more. They have to get licenses, which are tougher now. So now China is gobbling up silver, US is doing that, India is doing that. These are three big markets. And Russia is doing anyway from a long time, both gold and silver. Same thing with Canada. Now, one by one countries, and Saudi Arabia has gone into silver ETFs. One by one countries are coming to it. So now the pessimists will talk about big crash. We have seen this crash, so this will repeat. History need not always repeat. As I said, it didn't repeat as far as going up is concerned. So why should it repeat when it coming down? Especially with newer and newer usage and newer demand for silver. So we continue to be bullish on silver. We continue to add on any declines. We're already 20%, 20%. In any new portfolios, we will continue to add. And we are clear that, silver is just starting its bull run. If this 45 years ago, it was $50. Today, it has just moved up 20% from that peak. $67 is just about 20%. Now tell me one asset class in the world in last 45 years has gone up only 20%. Even if you take after COVID, silver was 30 after COVID. Now we are talking of 60 and all. So silver has only doubled. There are many stocks which have gone up 10 times after COVID. If you just go back and see our stocks, we don't call them a bubble if it goes up 2 times or 3 times. This damn thing has just doubled. That's all it has done. So I think people are looking through the wrong lens. People are missing, in my opinion, an opportunity. I am not a SEBI registered advisor. I do not advise anybody to buy or sell silver. We as a family are committed to buy silver and gold on every decline, including other metals. So you want to believe the pessimists or you want to believe facts, that choice is left to you. So whatever you do today, I hope it is successful. Thank you for joining me.